We are 1, 22, and 33. Do you remember during the first lessons I told you there are situations when we have not trading range available, and one of the situation is when the market is flat and moving lateral, or when the market is moving one way down or one way up. In this case, we have a euro dollar that moves one way down. So the available trading range, if we consider the last four candles, I need 4 hours, we have a trading range 99, 91, 33, 58 pips. It's not so easy. This is the reason, this is the second reason why we have to control all the time frame till the daily. Because if the market is one way down or one way up, we need to know what is our reference. In this case, what I need to know, what is the next reference down? So I will sell euro dollar only below 33 if confirmed signal. Not before. Well, I repeat, when we have a situation that the market moves one way down or one way up, we have a problem to consider the new trading range. When the market, like now, is one way down, take a look, the last 4 hour down, then a little bit up, down, then down again, we have a new trading range on 1 hour. 1 hour trading range at the time on 4 hour time frame is 1, 23, and 33, 1, 23, and 91. In this case, what is my interest? My interest is I have to another opportunity to sell because the market is moving down. But where to sell? On taking a look to 1 hour trading range, I have a signal to sell below, only below 33 or 132. Okay, this is very important, and this is the second reason why we have to control constantly. 30 minutes we have a trading range? No. So we take a look to 1 hour. We have a trading range on 1 hour? Nope. We take a look on 4 hour, etc., etc. Because we always, in case of one way down or one way up, we need a reference where to buy or sell. I can't sell, for example, now the market is moving down. I can't sell at 46 because it's inside the trading range. Well, now I decide to work on this trading range. Using 1 hour, I will be selling only below 123 and 33 with, with the same strategy. That's what I mean. That's why it's important to be able to practice the trading range. Because anytime we are ready to sell or buy, it depends to the movement. And we remember never use the top of the grid and the bottom of the grid, but change your time frame. This is important. Well, about that, what is the situation and what is driving euro dollar inside the trading range? Take a deep breath, relax, do not feel under test, and control the other currency, sterling dollar and dollar yen. Always is at the moment, as it always is at the moment, because the market can change. But you are right, because from the bottom, euro yen moves up. So if I am a bank and I have to buy euro yen, I buy euro dollar, so I am plus euro minus dollar, and I buy euro dollar yen. This is the reason what moving market up on dollar yen, because dollar is not involved at the time. Because we have an euro dollar that moves down, sterling moves lateral, dollar yen moves up. And you are right if you tell that what is moving euro dollar at the time is dollar yen. But we must control as well what happened on sterling. Euro sterling moves down. This is the reason why euro yen still support euro dollar and euro sterling capped euro dollar. Capped euro dollar. In other words, we have a resistance on top of euro dollar due to euro sterling. Meanwhile, euro dollar is supported by the people or clients in this case that still buying euro yen using arbitrage. As you can see, this is the proof that the market moves in harmony to be balanced on on the price. At the time we have sterling that moving down euro and dollar and yen that support the euro. Because if some banks start to buy, for example, euro sterling now, euro and start to buy euro sterling, euro moves up. In this case, at the moment, we can say that euro dollar is supported on the bottom from euro yen, and on the top is capped by sterling. In other words, they are in contrast. That's why it is important to control. In this case, once time we have the trading an available trading range in euro dollars, and we know what is moving euro dollars to control, because the more dollar yen moves up, the more euro dollar moves up. The more sterling dollar moves up, the more euro dollar is under pressure. This is, yes, this is the right analysis. Suppose we are trading on the market and we have to find a trading range on five different currency: euro dollar, euro yen, euro sterling, dollar sterling, sterling dollar, and dollar yen. Where is our trade? If we have a trading range in our situation on other currency, we can use to trade on other currency. In other words, we have five opportunity to reach our daily budget. This is why it is important to be in control of the market. I don't know if you have seen my tweets today on euro dollar around United States news. When I find the right trading range on 30 minutes, and was hypothetical because market was not so good, I decide to sell below 123 and 85 because the last trading range was 85. Let me check because I don't remember. Uh, I'm sorry, it's a bit boring, I know. Just to Now we take a look to my Twitter account. What I say before, well, this is the last the last trade, the last message. Market was 84.17 around 124 with the market at 124 before the news. And I said strategy on top still the same. So ready to sell above in area 35.45 on 124. I start to sell top. And short on the bottom below 84. That was wrong because it was 86. But I was rushing, you know what I mean. As you can see, after the news, the trading range is changed. And I say, now the trading range is nothing done on news, but the trading range is now 86 09 around 124. Take a look to the arrow. So action price below 86 or start to sell on top in area 25.35 of 124. Third movement. Euro dollar short ES a 123 and 85 on 30 minutes senior confirmation. Out of Twitter for a while. Position will be checked by mobile web platform, just not available. Stop loss 20 pips. Immediately from 30, I put 20 pips. Remember yesterday when I told you when you work during news, minimum 30 pips? I immediately put down my stop loss, 20 pips. Take profit area, 40.50. And all closed at 44. Closed at 44. On the month. I thank you very much, sir. So target reach. This is what I mean when I say remember to mix your strategy. Because I was with just one, I go to the under the news with just one idea to sell euro dollar. Okay? But I decide to mix a strategy. I sell euro dollar on action price below 86 and I sold at 85. Or in case of spike, I start to sell in area 35, 45 on 124. In other words, I didn't change my idea, but I mixed my strategy. Sell on top and action price on dip. That's what I mean when I told you yesterday, once time you have more than one techniques, you must be able to control the market. Why? Is important because we have the control of the market. So I was using the 30 minutes for, in other words, for professional traders. I used the 5 minutes, the 30 minutes, ready to sell on the bottom or on top. What up? Market after news still there and recovered an area around here. 30 minutes trading range, meanwhile, was just a little bit up. Instead of to sell below 83, was to sell below 86. I was flat. I update immediately the new trading range after news, and I leave the same strategy. Action price below 86 and start to sell on top in area 35.45 with the target I put immediately down because the market was very quiet. So instead of to risk after news 30 pips, I risk just 20. Because the first thing is to minimize the risk for me. So instead of to use 30, leaving 30 pips, what is the sense? Market was kept in above 24. So I sold at 123 and 85. Avoiding 30 pips of risk. So 20 pips is my stop loss. Okay? Well, meanwhile, I leave my stop loss at my strategy is the same, but I put down my stop loss in case the market moving down, action price below 86. When when I've seen 85, yours. So I sold below 85. In other words, this is the control of the market as well, under figure, under news, I mean. Because I start the idea, but the market moves not so much ethic, but the trading range change on 30 minutes. I update my trading range and ready to sell below 85 instead of 84. My stop loss during the news is the same. I mean, if I sell over a year and the market moves up 30 pips, I close the deal. Because remember, always I work always manually. Manually, I do not leave the order open to my provider. Secret is that we put order of the providers repeat to the banks that's still behind the provider. Hey, many people, yes, we have many orders at this point, many stop loss at this point. This is the reason why I suggest always work manually. Never leave the order to the provider. Provider are the bitches of the market. Yes, because they go with who has more money. This is the rules. Are the prostitute of the market. They go where the money are. This is the secret why I work constantly, manually, and I do not leave order. I sell, I'm in stop loss, I close. I sell, I'm in profit, I close. Never leave the order. I am not on On the market, I will use my platform on web on my mobile, but I do not leave order to my to the provider. No, no, I do not leave the order to provider. I works manually. I buy and sell manually. Never leaves order to provider. This is the reason. Because if they have thousand clients, for example, if they have a thousand clients that are looking to sell over here, they immediately say to the bank, hey, we have a total amount to sell below 33, for example. Yes, yes, but I control the market with my mobile. I do not leave stop loss and take profit to the provider. 7, 8 deals. Well, when I use the market, I used to know, well, first of all, it depends to the market strategy. If the market moves one way down like today, when I use the action price basic, so I sell and recover, especially under news, the same amount. Yeah, my average, I do not control the average because if the market now, for example, moves below 33, I sell just one deal. I do not use the technique for a double sell, and I explain to you immediately why. Because 4 hours resistance is at 32, just one pips below 1 hour. So when I sell on top, I can split my amount. That's why I say action price below and I start to sell on top. Because on top, I start to sell in area 124, 35, 45. Then in case I sell again in area 70, 75. For example, I split another amount because I can do more because first of all, I can trade till 4 million euro dollar with this account. But I use a fixed amount, 250, 2.5 lots, 250,000 only. Of course, I can decide to short my position till 4 or 5 times for major loss. Okay. On downside, I do not sell all the time 2.5 over here, 2.5 over here, and 2.5 lower. No, I sell only to, I use only action price on the side. No, immediately, okay. If we are in a normal market like now, if I sell, I close it 6, 8 pips stop loss. In case we are under news, I put a stop loss of 30 pips. I try to control the price on 30 pips. Because it's a different market, you know. The market is more aggressive. Yeah, sure. Yeah, sure. If the market moves up, I start to sell, controlling 1 hour and 4 hour over the top. Last top was, yes, because why I sell? Because I know if the market is driven by arbitrage or not. If the market is driven by arbitrage, in this area, the last top, for example, now is 124 and 24, more or less 124 and 235. I start to sell on top over here, then again on another top over here. I calculate first what up if I sell over here above over here, my average. On the average, I put 30 pips of stop loss. Well, the stop loss is 30 pips in this case because it's another technique. But, but, once time I know that the market euro dollar is driving not because dollar is under attack, I start to sell on top. But if the dollar is under attack, I do not sell on top, of course. How can I know? Controlling the arbitrage. Well, it depends to the situation. Now, suppose I'm working, market is one way down, I'm working only if the market moves, if euro dollar moves below 123 and 33, so ready to sell at 32 in other words. But first to think something like that, I control if the dollar is under attack or not. Dollar is not under attack. As you can see, euro dollar is supported by euro yen. Take a look to the dollar yen. Take a look to the last three candle of dollar yen and euro yen are equal. Take a look. Up, up and up, up and up. We don't know. We don't know. That's the reason why we use the trading range. The only thing that we know at the time is that euro sterling still pushing euro dollar down. Meanwhile, euro yen is still supported euro dollar on this area. So, following euro yen, sorry, and euro sterling, I'm able to understand what is the movement at the moment. Suppose, for example, that euro yen start moving down, probably euro dollar moves down if the sterling remains over here. That's why it is important to have the keys of the market. Now we know where the orders are. Now we know where is our trading range. Now we know what to control thanks to the arbitrage. Once time I control the arbitrage, when you are in practice, it's easily for you understand that the more euro dollar yen now moving up, like in this movement, as you can see, euro dollar is higher from 44 to 47. The more sterling dollar moves up, the more euro dollar moves down. Because if you take a look just to the majors, I mean all the currency against dollars, we have a euro dollars that moving down, sterling dollar that moves up, and dollar yen that moves up is anomalous. Is anomalous if we are not able to control the arbitrage. Because we have a dollar weaker on sterling, strong on euro, and dollar strong versus yen. What is the sense? The sense is arbitrage. Because the market moves just to be in balance. At the moment, if the dollar yen moves because people is buying euro yen, euro dollar moves up or still there, doesn't move down. It depends to control as well the sterling. This is the reason why we must be able to control the arbitrage. Okay. Well, second step, how to control the bias on long period. This is the weekly of euro dollar. Of course, the trading range is very wide. But we can have an analysis immediately using the trading range. In this case, trading range showed you an important things. Bias is up, but is moving down inside the weekly. If we suppose to put a line in the middle, we have all the reference on fundamentals. We have a trading range between 121 and 11, 124 and 74. This is the median line. Market is moving from up to neutral. In other words, if the market reaches area 122 and 92, bias changed from up to neutral. Below 122 and 92, bias changed from neutral to down, with a possible target at 121 and 11. This is the right method. Remember, this is just a line that I do it for you. That the market is closed now, and in a couple of seconds, I understand the bias on long periods. As you can see, the bias on long periods is confirmed from, for example, Bollinger Bands. Market up above, market down below. Yes. The possible target will be, of course, in the last stop, 120 and 30. Last stop. As you can see, thanks to the trading range, as well if you use to trade or as well if you to control the bias, you are every time ready to understand where the fundamentals are. In this case, we know that the point that can move euro dollar up is only 124 and 74. And take a look, was the last stop, then the market retracement for more than 150 points. This is important. Why? Because tomorrow we will see together how to work on trend. To work on trend, I mean, if we work on trend, we must be able to consider the market now, till the daily, and the bias on long periods, weekly and monthly. That's why it is important to use weekly, because In the weekly, of course, I add the fundamental because the spread is more than 360 pips. But thanks to the last candle, I see a retracement from the top. We take a look to the monthly now. If we consider the last 2 months, okay, much better to consider the last 3 months. No diagonal. We doesn't need the diagonal. On the monthly, bias remains up till one. Take a look to the price. One and 21. Do you remember what was the signal on 4 hour on weekly? On the weekly, we have 1, 21, and 10. So the change of weekly, if the weekly moves down, the monthly moves down and changes bias from up to neutral. The neutral price is the bottom of week on monthly, is the bottom on weekly. And this is the sign that every time frame is linked. Because on monthly, we must be considered that the bias is up. And now we know that the bottom of weekly is the change from up to neutral on monthly. In other words, ready to know as well where are the market. As you can see, Bollinger Bank confirms the top is 125 and 68 area. In this case, we talk about area, not 1 pips or 2 pips. The second Bollinger Bands confirms that the bottom is 116 and 36 at the moment. In other words, 1,000 basis points or less. Now we have a consideration of this period. And we must be able as well to do and control the long period for the other forex measure and arbitrage that to have a point of view. That's the reason why I use the trading range as well, especially as advisor that I am for a lot of a lot of oil companies. But I use to show them something like that because they need to know where the fundamentals are. I cancel because I don't want to confuse you. Well, in this case, a long period, I have the fundamentals. If we compare euro dollar bias on weekly and monthly, we did with sterling dollar weekly and monthly, dollar yen weekly and monthly, euro yen weekly and monthly, euro sterling weekly and monthly, we have exactly bias because the bias showed you that in the long period, this is the euro yen. Take a look on weekly. Euro yen from the bottom moves up. Monthly still up. Like euro dollar. This is another proof that what is moving euro dollar on long period is not the dollar but the arbitrage. Just an example. Thanks to the trading range, I'm able to analyze the market in a bank. It's just the sterling. Sterling is lateral and bias is down. So euro is moving down on the on the weekly trading range. So sterling getting power is not the case. On monthly, bias is neutral down. Take a look. Yep, indeed. The Brexit is the most power is a problem, and someone is undervalued Brexit because they decide the amount, but they didn't decide at which rate. So sterling, United Kingdom uh, needs to give to the euro community something about 50 billion sterling. And this is the explication of the big war inside between euro sterling. Because sterlings need to push down euro dollar and getting power. So 50 million, thanks to the revaluation of sterling, is look like instead of to be 50 billion will be 49 billion and a half, 49 billion, but it depends to the movement. As you can see, this movement reflect the market. The market at the time moving just for arbitrage. In fact, in the last month, sterling getting power from dollar, pushing bias down from neutral. We are below the neutral section, so it's mean that the market, that the sterling getting power versus euro. In other case, we have a euro that's getting power on yen. This is the proof that what is moving the market in the last 1 year are only the arbitrage. Take a look. If we take a look to this movement, is look like the opposite of euro sterling. Why? Because market there is an internal war in euro between United Kingdom and Europe due to Brexit. So the more we moves down, the more euro dollar moving down. But it depends what is doing euro dollar on euro yen. In a bank, in a second, we are able, thanks to the using the trading range, to understand what is the market movement or long period. Long period is important to control other periods. This is the sterling versus dollar. Neutral. If you take a look to my interview with Dale Pinkert that I sent you when I introduced myself, that's what I explained. So it's useless to talk about only euro dollar, dollar yen if we are unable to control the arbitrage, because what is moving euro dollar for the 90% are the arbitrage at the time. So dollar is not under attack. And this is euro sterling, dollar sterling, sorry. Take a look to the yen. Dollar yen moves up. We take a look to the weekly. Well, bias is down from the bottom. Monthly, well, bias is down. Is not the case. Dollar, yen getting powers on the dollar, but moves only for arbitrage. Because euro dollar, dollar yen, sorry, on monthly bias is down. As you can see, in the last 3 months, the dollar moving down. And you can tell me why at the time on 30 minutes dollar bias is up, because arbitrage moves. As you can see, using a trading range in a second, and sorry for I repeat, we are able to understand the bias of the market on long period. Because today, for example, is the opposite. On 30 minutes, we have a euro dollar yen that moves up. So dollar getting power. No, it's wrong. Dollar getting power because someone is buying dollar yen, euro yen, sorry. Tomorrow we will learn the last technique, work on trend. That's the reason why today, I'm sorry, to boring you with this graphic. This is the reason why I showed you how to analyze using the trading range as well on long period. Tomorrow I will show you how to work on trend. I mean, still open more than 1 day on the market. The example will be always in your favor if you buy or sell. I will be the trader and you will be my position keeper, so control the arbitrage. And together we decide a strategy of 3 4 days to be open on euro dollar. Why? Because we are not the bank. The bank sometimes used to work as well a long period between 3 6 months. That's why they use a stop loss so big. I mean, to figure stop loss and 400 pips take profit, 200 pips stop loss, because they are a bank. We are not a bank. But we must be able to control position as well in overnight on periods 4 5 days. The simulation will be in your favor because there is a reason that you will know only when we finish the simulation. I thank you very much for your attention. Sorry, Camelia. I thank you very much for your attention. Enjoy your evening and see you tomorrow for a quick and easy lesson how to trade on top. And you will be involved for first. Okay? Bye bye.